Let's talk about the latest strategy note coming in from Jonathan Garner of Morgan Stanley. He, of course, is the emerging market equity strategist, and he's written about what's happening across various global markets. Now, he starts by saying that overall financial market behavior is equal to an early cycle recovery. That is essentially what he's telling their clients. He's also saying that they at Morgan Stanley favor Japan, favor India, favor Australia, as well as Singapore within the markets that they particularly like. Now, in terms of style of investing, growth was earlier the style of investing for the last 7-8 years, but now it has shifted to value, and that's why they are also advising their client that value as a style will be favored over growth, and that's why they are overweight on financials, energy and material across these various regions that we spoke. Global economic momentum is uneven, and this will outpace what's happening in the rest of the world. US dollar has gone up from the lows, but it's unlikely that it's make a new trough. They believe that global bond yields will increase from here somewhat, but somehow it will not have a major impact on the equities. Why they believe so is because global equity markets are close to their base case valuation. Earnings momentum, according to them, can pick up, and that will outpace what's happening in dollar, what's happening in the US global bond yields, as well as what's happening in the valuation side. So they believe that things will look positive as far as earnings growth is concerned. Now, within the emerging market basket, China, they have reduced it to underweight in January, but value has started to appear in A shares as far as China is concerned. They have a list of stocks which they particularly like, and within that there are 3 to 4 names as far as Indian markets are concerned, which they are advising their clients. So they are overweight on HDFC Bank. This has always been an overweight for them. They continue to be the case. If you want to play India, HDFC Bank is one of the best ways to play it. That's what they are telling their clients. In terms of IT names, they like TCS. Despite the up move that you've already seen in the technology name, it favors as a part of their overweight list from Jonathan Garner. And L&T, of course, this becomes a domestic cyclical, and this also makes its way into the space. So when we just talk about what's happening in the emerging markets, there has been some correction, and probably on the light of that, he's written this note saying that financial market behavior is as if it's an early up cycle. That's what they are telling their client. The style of investment has shifted from growth to value. Growth, of course, has dominated for years now. There have been some concern as far as dollar index is concerned, the up move in the dollar index back to the 1992 levels, but they believe it's unlikely it's at a trough. In terms of global bond yields, they have risen. So US 10-year has gone up from 0.9 to about 1.7, but they believe that it will continue to do well. But at the same time, global equities in terms of valuations are at a base case, and it can actually outpaced by the earnings growth. So as and when the earnings momentum would continue, again valuations would look cheap, and that's what their base case is. India forms a part of their overweight market. China continues to be an equal weight.